Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, March 28th. Today, we got S&P Case-Shiller home price and other related house price indexes. So the Case-Shiller year over year came lower than before, but as expected, 2.5%, and month over month in the negative again from minus 0.9 previous to minus 0.6. Price index year over year, 5.3, lower than the previous one, and month over month showing a slightly increase, but overall, housing sector is cooling down, both selling and also rent. So that's due to, this is coming from January, so this is due to a lower pullback on interest rates and higher outlook. So I think this is relatively good, because housing sector is one of the sectors that are remaining pretty tight, same as labor market. So the Fed are watching these kind of indexes to see signs of cooling down the economy. Apart from that, consumer confidence came in a little bit higher than expected. We expected 101 and we got 104. And Richmond Fed Manufacturing Services and Index and shipments, still in the negative, so still shows signs of manufacturing and services going down, going in the negative. But the big, I think, testimony today was Fed Barr. I think this was one of the testimonies into the Senate that was getting attention, and basically they were talking about Silicon Valley Bank being a clearly textbook mismanaged bank. The financial sector and the banking sectors, the rest of the banks are quite robust and resilient, and there's no more signs of weakness overall. And I think they are trying to spread the fact that this is only a unique fact, a unique bank due to mismanagement of assets and all related mismanagement from their supervisors and other related people on board. So this is a closed case. SVB and First Republic and the other banks that fell were clearly unique, and is not something that is spreading maybe risk on other banks to follow the same. This testimony was kind of scripted, and I think if we check the market, I think the market is not buying these kind of things. They are trying to say that the SVB Silicon Valley Bank was only mismanagement, is not something that is embedded on other banks. And if we check FRC minus 4%, Credit Suisse in the negative, JP Morgan slightly flat, Goldman Sachs in the negative, Wells Fargo in the negative, and overall the regional sector is still in the negative. So I think this kind of message from the Fed and from the FDIC markets are not liking that. And they are smelling the recession, they are smelling the risk, and they are just selling assets. The same as yesterday that we got big waves of selling. If we check the volumes, each of these volume spikes is big funds managers selling into the rip. And today is more of the same. If we check these spikes are big managers, big banks, big positions just selling off, getting out. This was a clear channel. Right now we are trying to at least hold today's lows, but I think being in here right down and this pivot not being taken out, there's a lot of top intakes in here, and we are right now again below point of control. We are seeing weakness across the board. And if we check the daily, we can see that These pivot, these lows that today we are trying to break down are key. And if we take down today, close below these levels, I think the target for the bears is last week low, this blue dot line that is sitting at 12,525. So be careful there, bulls. I was taking some shorts here, but I didn't like the price action. Today is super slow, and I think no one from the retail world has any big understanding of what is going to happen, neither the big funds. So I think today is going to be a really choppy day, and really more or less I think it's going to end up as open. And I think it's not worth, from my point of view, to continue trading, at least trying to look for longs, because bears have this pullback and I don't think longs are going to commit unless we touch base on this last week low. So Apple is in the red, minus 1%, still chopping out. Look at this weakness again, minus 1%. Microsoft minus 1.15. They are dragging the market down. Tesla minus 2.40, and it's not looking good. It's not holding. It's doing low after low of day. Google minus 2% again. So a lot of Nasdaq and tech stocks are really feeling the pain right now. Dollar is basically trying to find some buyers. There's no one really committed to the dollar yet until all these issues with the banks settle and we find a solution. And the only thing that are in the green are yields. The 2-year yield, again, big day for it, 1.10%, and the 10-year 0.85. Remember that the 2-year yield is the one that is controlled by the Fed, and the 10-year is controlled by the market. So the 10-year is one of the most important yields, and look at these bottoming tails. They are not letting it go. They are buying all this. So yields are going to go higher, and most probably this is interest rates futures for December sitting at 4.33. Right now, remember that we are at 4.75 and 5. And if we check the probabilities, so right now we are sitting at 4.75, 5%, and look at this, 50-50. Left one is flat, no interest rate hike on May, and the next one, the right one, is 25 basis points increase in May. This is still a lot of discussion about what Fed are going to do. Right now, 5 is going to be, if they choose to hike, I think 5.25 will be the most probably the terminal rate. And from then, everyone, analysts, and also the bonds market are pricing in a lot of interest rates cut this year. On December, remember, this is the 4.25, 4.50, the same as if we check the interest rates futures here at 4.33. So right now, 4.75.5, at least 75 basis points of interest rates cut from May to December. This is something really interesting and really important for you to understand. Bonds market analysts are betting on interest rates cut. Jerome Powell said the other day that they are not discussing, they are not thinking about cutting interest rates. So there's a lot of divergences on the stock market and also the bonds market towards the Fed. So really interesting, but overall, what you have to think about is risk. You have to manage your risk and your position, and being patient is key for that. So there will be more opportunities for sure this week. If we check the calendar, the economic calendar, we can see that tomorrow we have mortgage. I don't think this is going to be big issue, big moves. But on Thursday, we have GDP. This is really important, and jobless claims. And on Friday, we have PCE. So I think you have to tread waters until Thursday and Friday, the big days. Just be patient, wait for those opportunities and for the volatile market to decide, and don't waste your time. This is my opinion. Don't waste your time with this kind of market that is not picking up really a trend. I'm a trending trader and I don't want to spend time in this shop. So my advice is just be patient, be disciplined, wait for your opportunity. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for you to understand my recommendations, to understand my point of view regarding the markets and also the Nasdaq. And I have videos on market forecast, market updates, and market recaps every single day. So don't miss that. Subscribe to the channel, support the channel, and you will be surprised the kind of things that you can learn every day from the markets. Thank you for your time as always. Remember that the training day is not over yet. We are still seeing weakness. Most probably we are going to retest at least low of days. Let's see if we break down that or not. But for now, let's wait for lunch hour and see how we end up into the power hour. So thank you for your time and stay safe, everyone.